15 Investments Rich People Make. In this video, you'll learn about 15 investments that rich people make, which most others are unaware of. These are the types of assets that the wealthy use to build and preserve their fortunes, while the rest of us might be missing out on these golden opportunities. Stay tuned and discover how the rich think about money differently, and how you can start making smarter investment decisions today. Footnote: the rich invest in unconventional assets to build wealth. These opportunities are often overlooked by the average person. 1. Whiskey and wine, the investment of time. One of the secrets of the rich is investing in whiskey and wine. While most people buy a bottle here and there, the wealthy buy barrels and hold on to them for decades. Whiskey, for example, can appreciate by 10 to 15% annually, and investment-grade wine has seen an average return of 10 to 11% since 1988. Instead of buying whiskey off the supermarket shelf, rich people make long-term investments that appreciate over time, leveraging the aging process for profit. Footnote: whiskey and wine can be lucrative investments due to their appreciation over time. 2. Collectibles, rare items for big profits. Rich people often invest in collectibles like rare books, comic books, toys, sports memorabilia, and even sneakers. These items can appreciate immensely in value. For example, a Pikachu card sold for over $5 million, and Michael Jordan's 1998 NBA Finals sneakers sold for $2.2 million. The key is finding rare, high-demand items. But be cautious, like with Beanie Babies or NFTs. Market demand can shift and impact your investment. Footnote: investing in collectibles can bring high returns, but be mindful of market volatility. 3. Luxury watches and purses. Luxury items like Rolex watches and Hermes Birkin bags are more than just symbols of wealth. The limited availability of these products makes them prime investment opportunities. A Birkin bag purchased for $10,000 can easily resell for $30,000 to $40,000, and a Patek Philippe watch purchased for $30,000 to $50,000 can fetch over $100,000 on the secondary market. Wealthy individuals often build connections with luxury brands, securing access to these items before they're released to the public. Footnote: limited edition luxury goods are highly sought after and can appreciate in value over time. 4. Private banking, elite banking services. While regular savings accounts offer minimal interest, private banking provides high-net-worth individuals with exclusive services and higher returns. For example, banks may offer returns between 7 and 13% annually on deposits, while everyday people are stuck with paltry interest rates. Rich people don't just use banks, they leverage them for greater financial gains and benefits like concierge services, private events, and luxury discounts. Footnote: private banking offers high returns and exclusive services to wealthy individuals. 5. Art, the ultra-wealthy's investment of choice. Fine art has long been a hidden asset for the ultra-wealthy. Art is not only a status symbol but a proven investment. Art's value tends to rise even during economic turmoil, and high-net-worth collectors have doubled their spending on art in recent years. Platforms like Masterworks allow regular investors to buy shares in expensive works of art, with proven returns on investments. Footnote: fine art is a stable investment for the wealthy, with its value increasing over time. 6. Hotel rooms, a low-entry investment. Owning hotel rooms can be a profitable investment. By buying a room in a luxury hotel, you can use it whenever you want, and when you're not using it, the hotel rents it out for profit, splitting the earnings with you. Hotels like Trump's real estate empire offer this opportunity, allowing investors to purchase rooms or apartments within the hotel. Footnote: owning hotel rooms provides passive income through rental profits when not in use. 7. Rooftop rights, a smart real estate investment. Rooftop rights are a novel investment opportunity where investors buy the rights to a building's rooftop space. the space is used for solar panels or to accommodate drone deliveries in the future. This trend is growing, and rooftops are becoming valuable spaces for generating income. Buying rooftop rights can be a cost-effective entry into the real estate market. Footnote: rooftop rights are an innovative way to invest in real estate with future potential. 8. Mineral and water rights, untapped resources. Rich people often invest in mineral and water rights. Purchasing rights to valuable resources, like spring water or minerals, can lead to significant profits. For example, the founder of Dorna Water sold the brand to Coca-Cola and later sold Aqua Carpatica to Pepsi. By securing mineral rights, individuals can profit from natural resources without needing to extract or manage them themselves. Footnote: owning water and mineral rights allows you to profit from natural resources. 9. Buying other people's debt. Debt collection is an overlooked investment opportunity. By purchasing other people's unpaid debts for pennies on the dollar, investors can profit when the debt is repaid. Collection agencies sell bundles of debt, and savvy investors can purchase them at a significant discount, making substantial returns when they're able to collect the debt. Footnote: buying unpaid debt allows investors to make a profit by collecting on the owed money. 10. Coaching and counsel, leveraging expert knowledge. Rich individuals understand the value of mentorship and coaching. Instead of learning through trial and error, they seek guidance from experts to accelerate their success. By leveraging someone else's expertise, they save time and avoid mistakes. Even if you don't have access to top-tier coaches, affordable mentorship and learning platforms are available for anyone willing to invest in themselves. Footnote: investing in coaching helps accelerate personal and professional growth. 11. Private equity in early-stage startups. Investing in private equity in early-stage startups allows investors to take a stake in growing businesses. By owning part of a business, you profit from its success without the risks of starting one yourself. For example, buying 51% of a bar allows you to share in the profits while the management runs the day-to-day operations. Footnote: private equity in early-stage startup investments offer high returns in exchange for equity. 12. Investing in emerging markets. Emerging markets, such as certain regions in Africa, Asia, and South America, offer high-return investment opportunities. Real estate and business centers in these areas are still affordable, and investing in them early can yield significant returns as these markets continue to grow. Footnote: emerging markets offer affordable investments with high potential for growth. 13. Square footage for real estate developments. Rich people often invest in square footage for real estate developments before construction begins. Developers sell a portion of their projects to private investors at cost, and when the building is completed, the value of the property has risen. These types of deals require large initial investments but offer strong returns. Footnote: investing in square footage during early development stages provides significant profits once the building is completed. 14. Hedge funds, the ultimate high-risk, high-reward investment. Hedge funds are exclusive investment opportunities for the wealthy, with the goal of outperforming the market. While the minimum investment is usually in the hundreds of thousands, hedge funds promise high returns, sometimes as much as 30 to 40% in a single year. However, the risks are high, and not all hedge funds outperform the market. Footnote: hedge funds are a high-risk, high-reward investment strategy for the wealthy. 15. Marrying rich, the ultimate asset. Marrying someone wealthy is often seen as a shortcut to financial success, but the reality is that wealthy people are more likely to marry other wealthy individuals. For anyone who wants to marry up, the key is to first build your own wealth. This makes you more likely to engage with individuals in wealthy circles. Footnote: marrying rich is more likely if you first build your own wealth and enter wealthier circles.